What if I told you most traders lose money on leaps not because they picked the wrong stock, but because they bought at the wrong time? In this video, I'm going to show you to know when to buy leaps, and I'm also going to show you the exact IUs that combines RSI moving averages IV rank, so you stop guessing and start buying leaps at the best possible time. Let's get into it. Hey everyone, welcome back to the channel. If you enjoy content about stock trading, options, and long-term wealth strategies, make sure you hit the like button, subscribe, and turn on notifications. Now let's talk about leaps. First, quick refresher. Leaps are long-term options contracts, usually. They're popular because they allow you to control 100 shares of stock, but with a fraction of the capital you'd need to buy the shares outright. And if you time them correctly, leaps can be one of the most powerful wealth-building tools available. But timing is everything. A lot of traders know about RSI, the Relative Strength Index, but they use it wrong. Most people think RSI means RSI is at 30, buy. RSI is at 70, sell. That's only half the story. RSI is not just an oversold indicator, it's a momentum indicator, and momentum is exactly what you want on your side when buying leaps. So here's the number one question. What is the best RSI chart time frame to use in Thinkorswim for leaps? And the answer is 180-day 4-hour. Let me say that again. 180-day 4-hour RSI 14. This is the best time frame because leaps are long-term trades, and if you use short charts like 1-minute or 5-minute RSI, you'll get a ton of fake signals that don't matter. The 180-day 4-hour chart shows the real trend and filters out the noise. Now let's talk about the RSI levels that matter. Even better, RSI between 30 and 35. But here's the key. You don't want RSI to just hit 30. You want RSI to hit that zone, and then start turning back upward. That upward curl is often the first signal the stock is starting to reverse. When RSI breaks back above, that's a major sign bullish momentum is returning. Now here's where people get destroyed. Do not buy leaps calls when RSI is already high, because that usually means the stock is extended, and you're buying when the move has already happened. And remember, leaps are expensive. You want to buy them when the market is fearful, not when the market is greedy. Now RSI alone is not enough. So here's what you add next. Moving averages. Inside Thinkorswim, add these 3 moving averages, 20 EMA 50 SMA 200 SMA. Now here's what you look for. The 200 SMA is one of the most powerful support levels in the market. If the stock is pulling back and holding the $200, that is often a perfect leap setup. The 20 EMA tells you if short-term momentum is returning. One of the best entry signals is when price starts to reclaim the 20 EMA after a sell-off. This is a major trend line. If price breaks back above the 50 SMA after a pullback, that is often the start of the next leg higher. That is one of the best leaps entry signals you will ever see. Now let's talk about something most traders ignore. IV rank. IV rank stands for implied volatility rank, and it tells you if options are cheap or expensive. This is critical for leaps, because even if you buy at the perfect RSI level, you can still lose money if you overpay for the option contract. That means premiums are cheaper. IV rank is above, because you're paying inflated premiums. Now let's combine everything into the ultimate leaps setup. Here is the perfect storm. Leaps entry signal. Stock pulls back 10 to 20% from highs. RSI drops below 40. RSI touches 30-35. RSI curls upward. Price holds near the 200 SMA. Price reclaims the 20 EMA. IV rank is below 40. Bonus. Reversal candle forms. Hammer or engulfing. If you see that combination, that is one of the best times to buy leaps you will ever find. That's when you're buying the dip. But with confirmation. Not guessing. Now once you know it's time to buy, you still have to choose the right contract, so that means 365 to 730 days. More time means less stress and less theta decay. You want a contract with a delta around 70. That means it behaves more like the stock. This is the safest and most consistent way to trade leaps. They look cheap, but they decay faster and fail more often. Leaps are about consistency, not lottery tickets. Here's one more important thing. Even if RSI is oversold, do not catch a falling knife. You want to see confirmation that buyers are stepping in. So look for RSI turning upward stock making a higher low stock breaking above the previous lower high volume increasing on green candles. This tells you the reversal is real. Now how do you know when to take profit? Here are the best exit signals. RSI reaches 65, the 70 stock hits major resistance, price becomes extended above the 20 EMA. That's when it's smart to either take profit or roll your leaps to lock in gains. Now here's a pro move. If IV rank is high but you still want to get into the stock, instead of buying a leaps call immediately. Why? Because when IV is high, premiums are inflated, so selling puts gives you more premium. Then once volatility drops, you can use that premium to buy the leaps call cheaper. That's how traders get paid while waiting. Alright, here's the full leaps checklist in 20 seconds. Buy leaps calls when RSI under 40 and rising, price holding support or 200 SMA, price reclaiming 20 EMA or 50 SMA, IV rank under 40, expiration 12-24 months out, delta between 0.60 and 0.70, RSI is above 60, price is extended, IV rank above 60, stock is still falling below the 200 SMA, and that is the best RSI setup in Thinkorswim to time your leaps entries like a professional. If you want, I can also make a follow-up video showing the best RSI setup for selling puts, how to use RSI for weekly options, and how to combine RSI with MACD and volume for even stronger signals. If this video helped you, hit the like button, subscribe, and comment below. Thanks for watching, and I'll see you in the next video.